Let's look at the insights of order flow dynamics in trading. First, let's tackle the misleading nature of candles. It has become fashionable these days to remove everything from your charts and simply gaze at the candles for market insights. These supposed smart money traders are falsely taught that this is reading the tape. Naturally, when a trader hears terms like volume within the context of candles, they would assume it fills the entire candle like water flowing through a pipe. Why wouldn't you? There are no markers to the candle signifying otherwise, other than high, low, open, and close. Scientifically, it is also easy to assume the concept of volume in trading is similar to Bernoulli's principle of fluid dynamics. The term volume must mean it's like particles of water moving in that streamlined manner through the candle pipes, creating a pressure to move it up or down. However, using order flow, this idea evolves into something more interesting. Since we can look inside the candle and see where each participant enters, and how that pooled interest leads to an explosive surge in a direction with little to no volume attached to it. These pooled market participants create obstacles to the flow of price using their aggressive buys and sells, and those turbulence create ripples that liquidate the other side for the obstructions they caused. An eddy, or imbalance in the chart. Just imagine, if there were no aggressors in a marketplace, everything would be smoothly traversing around the candle, and there would be no increase or decrease in price. The market would be in constant consolidation, and intentions would be static or laminar in flow. It's all about the aggressor, the one who crosses the threshold to hit the bid or the ask. So you may be wondering, what is the bid and ask? The bid is the highest price. A buyer is willing to pay for an asset. The ask is the lowest price. A seller is willing to sell an asset. The market, as you know, is an auction. In a time of scarce supply, sellers are disinterested to sell, so the buyers reach across the aisle and feel the demand to hit the ask. In a time of scarce demand, buyers are disinterested to buy, so the sellers reach across the aisle and feel the demand to hit the bid. With order flow, you can clearly see who is the aggressor and who is in control. Ask yourself, does the aggressor get rewarded or punished for their aggression? These type of answers cannot be gotten without viewing the order flow. The most primitive form of the order flow is the tape and sales. This shows three things: the price, the volume, and the bid, ask. Unless you are some kind of savant that can see all this in a split second and calculate who is in control, it's hard to be of use when hundreds of contracts flood into the market. This is where the footprint chart comes in. It takes all this data and consolidates it into a readable table of information, which can be viewed easily. This table comes in many visual formats, but generally contains key data points: the delta, max delta, min delta, cumulative session delta, point of control, and imbalances. The most primary thing to understand is the delta. When the seller hits the bid, you get a negative delta aggression. When the buyer hits the ask, you get a positive delta aggression. Now let me ask you again in this context. Who is in control? Does the aggressor get rewarded or punished for their aggression? Pause the video and pick one. If you answered punished, you are correct. You can clearly see price hasn't returned to that point of aggression again. Order flow itself isn't a standalone system for trading, but rather a tool to enhance it. You would still need a context for why you would be looking to see a side rewarded or punished. This is why it can easily fit with any trading system you currently employ. Let's look at this example in more detail using the Momentum Master System. In the context of the markets, it was the last 2 days of trading for the year. Asia took it to all-time highs while also giving us a nuke signal of fatigue, symbolizing the fatigue across the 7 key timeframes, insinuating an upcoming market shift to the downside. London maintained the price and made yet another hit to higher highs while giving us another nuke fatigue sign. And then there was the upcoming 8:30 pre-market news release to look for entry on. So that was the context for those last aggressors of buys, and us looking for them to be punished at all-time highs into that news drop. It could have been shorts being eliminated as market buys, or neophyte traders buying a breakout. Honestly, it doesn't matter which. The fact is, the data is visible to place your bet on. Since the aggressor was being punished, it showed which side was in control. The seller. The confluence with our system was in line with this idea, and sure enough, the year finished with a sell-off. So, what are you waiting for? Invest in your edge for 2024. Chart smarter. If you would like to see more order flow in-depth analysis videos where we can go over ideas of exhaustion, absorption, and more, consider subscribing, hit the like, and leave a comment.
Be your own guru.